Distinguished guests, ladies and gentlemen, pleasant and warm regards to you all for joining today's webinar on COVID-19 and money in Sub Saharan Africa, opportunities for financial service providers, brought to you by the Sustainable and Inclusive Digital Financial Services Initiative in Lagos Business School, Pan-Atlantic University. My name is Immanuel, and I'm the supply side lead in the Sustainable and Inclusive Digital Financial Services Initiative, in addition to which I'm a member of faculty at the Lagos Business School in the Strategy and International Business area. I also acknowledge the presence of Professor Olayinka David West, the Director of the Sustainable and Inclusive Digital Financial Services Initiative and Academic Director, Lagos Business School. Thank you for joining this webinar. And to our esteemed panelists, Ms. Rashmi Pillai, Executive Director, FSD Uganda, Ms. Ashley Immanuel, Head of Programs, EFinA, Mr. Brian Muthiora, Regulatory Director, Mobile Money, GSMA, and Mr. Serge Soglo, CEO, MTN Mobile Money, Benin Republic. Warm welcome to you all. Fellow participants, some housekeeping rules. Mute audio. Your audio is automatically muted. The hosts and co-hosts in this event will control your audio and will unmute this only if you would like to contribute to the discussion. Attendee videos are also not visible during this Zoom event. The platform has a raise hand feature that allows all attendees to raise their hands to indicate that they need something from the host or panelists. There is also the chat window where you can drop comments, and the Q&A window where you can type in questions for the panelists to respond to during the session or at the allocated time towards the end of the webinar. Honored guests, let me now introduce you to our technical moderator for today in the person of Professor Olawale Ajayi, Policy Lead, Sustainable and Inclusive Digital Financial Services Initiative, and Head of Strategy and Entrepreneurship Department, Lagos Business School, who will be the moderator of today's webinar. Without further ado, ladies and gentlemen, I welcome Professor Olayinka David West, the Director of SIDFS, to give the opening remarks. Welcome, Yinka. The floor is yours.
Thank you. Good morning, all. And thank you all very much for taking the time to join us out here today to talk about something that's very pertinent and interesting and evolving every day, COVID-19 and money. When the pandemic started, we saw a lot of governments lending a helping hand to the underserved and the poor. But then again, there's a middle layer of people who are providing these services to the underserved and the poor. Who looks after that middle layer? Who has their back in general? And this is the question and the conversation we've invited our esteemed panelists to talk about today. We want to look at this from an Africa-wide perspective because we believe that by the power of that collective knowledge, we can learn and grow and we can evolve better products and services in Nigeria and better institutions as well. So thank you all very much. My job is very easy, just to say welcome, enjoy the conversation. Please ensure that you participate and ask questions, and I look forward to welcoming you on another event. Thank you very much. Nkem, I'm handing back over to you.
At this point, I'll welcome Professor Olawale Ajayi to commence the event. Thank you very much, Professor Ajayi.
Thank you very much, Nkem, and thanks to Yinka for the remarks. I'd like to welcome you all again, as we do in Africa. And of course, I'd like to welcome the speakers. Well, so the topic has been shared is COVID-19 and money in Sub Saharan Africa, and opportunities for financial service providers. And I do hope those opportunities will certainly translate into win-win outcomes for everyone. So COVID-19 has caused massive disruption, and the lockdown, or whether partial or full strategy, as well as the lockdown of cities, has been especially difficult to implement in Africa. Many people depend on daily income. The financial and logistics channels are generally weak, among other things. Of course, COVID-19 is a rude wake-up call that the quest for financial inclusion should be speeded up. It also has its negative impacts in terms of, worse MPLs for FSPs and things like that. So it's very useful to look at both sides of the equation. How have services been delivered, particularly to the bottom of the pyramid? And what should we do to do better post-COVID-19? COVID-19 has been a litmus test for financial inclusion programs, as the gaps in non-cash transactions and inclusive products have become quite obvious. So what is the scale of the gaps? What has been the general impact on socioeconomic life and development? How well or badly have FSP served the bottom of the pyramid financial markets in Africa? What has worked? What can we learn from those who perform creditably? And how can the FSPs leverage the opportunities for deepening financial inclusion? How can they become more sustainable? And these are some of the questions the distinguished panel with me will be discussing today. So join me as I welcome our esteemed panelists for today. We have Ms. Rashmi Pillai, the Executive Director for FSD in Uganda, that's Financial Sector Deepening. She counts herself as an African and has worked very deeply in financial inclusion. So Rashmi, you're welcome to the panel. We also have with us Ms. Ashley Immanuel, Head of Programs at EFinA, that's Enhancing Financial Innovation and Access in Nigeria. This organization has done sterling work in terms of bringing data, in terms of bringing knowledge about the gaps in financial inclusion for regulatory intervention for players and for everyone. So you're welcome, Ashley.
Thank you. And I count myself as an African too.
Without doubt.
My name is really Kemi. You just didn't put it on the screen there.
Right. So Kemi is Head of Programs at EFinA. I'm very much involved in the research, very superb research work that comes out from EFinA. We also have Mr. Brian Muthiora, who is the Regulatory Director for GSMA, Mobile Money Program. That's the Global System for Mobile Communications. He was very much part of the M-Pesa success story in Kenya, and has gone on to do larger work, particularly from the regulatory perspective. He's the Regulatory Director for Mobile Money, and he will be sharing with us perspectives across Africa. We will be joined, or we have been joined by Mr. Serge Soglo. Bonjour, Serge. Serge is nearby.
So how are you?
Very much so. You were nearby in Benin Republic, but apparently the usual border closure or the hold up at the border kept you much longer. But thank God you are here now. All those barriers in Africa.
Yeah, thank you. I apologize. You know, some connectivity issues for a while. Yeah.
Right.
Thank you very much.
You're welcome. He's the CEO for MTN Mobile Money in Benin Republic. So we have, you know, seasoned persons with us, and I don't want to take further time. Let's just dive into the discussion. And please remember, if you have any questions or comments, kindly enter them in the Q&A portal. And if you have any chats, please insert them on the chat column. We'll try and pick these as we go on. And definitely we'll have some time, probably at the end of the discussion, to take questions and comments. Right, so I want to open up our discussion by asking, how has COVID-19 crisis impacted on FSP's financial inclusion service delivery? And by the way, FSP's financial service providers. That's the banks, the microfinance banks, agents, all the ecosystem. So how has this crisis impacted on their service delivery performance? Rashmi, can you help us?
First and foremost, thank you for having me on this panel, and glad to be discussing this with you. And Prof, if you've lived and you call a place home, then that is what you are. So as a now Ugandan, I consider myself African.
Great.
Coming to the question that you've asked, let me give some context to this question. So we have to acknowledge the fact that the entire financial sector, realizing that a healthcare crisis has very quickly become an economic crisis, rose up to the equation. And they, you have examples from multiple African countries where providers like MTN, Airtel, that provide mobile money, have waived off fees across tiers. You have banks that have agent banking models that have also done the same. In countries that you have where banking and mobile money, the push-pull between these two store of value has also been made free. So the financial sector realized that with a lockdown, you still need money, whether you access that digitally, and therefore they need to find solutions to help people in a crisis, especially where incomes have been reduced, but expenditure has not dropped down proportionately. So we should recognize that. But when we come to what is the impact is actually varied across the financial sector and across the population that we are interested in and talking about. So some of the immediate data that we're noticing in multiple countries is, let me give an example of Uganda. So Uganda has, the banks have a shared agent banking model. They have the same platform, just like Visa, and multiple banks have joined in. Within the first 4 weeks of the lockdown, there was a 72% drop in volumes of agent transactions. Of course, people who are banked in a lot of East African countries actually are more well off than the people who use MF non-deposit taking institutions or SACCOs, etc. But there was a significant drop because of the lockdown, also because agents needed to get to banks. There was just no transport. So you had rebalancing issues and challenges of that sort in multiple countries. Now, this also had a very different hierarchy of impact on banking agents versus mobile money agents. So in rural areas where you don't see, the lockdown was not, let's say not as strict, or people could walk to an agent, the impact on mobile money agents was less. There was a significant impact on the livelihoods of urban agents who, are more densely packed together, could not get to the location. And there was a very strict curfew on when you can go and deposit your cash in banks. So when it comes to the service arms or the channel pieces of financial services, the constituents of those channels were impacted. But we also talk about the financial sector as a whole. What about banks? Well, a lot of banks are now across multiple countries and renegotiating or restructuring debt. They are already trying to assess the levels of NPLs that they will face, or how is that going to affect their operational cash flow, given that the debt repayment is going to take longer. I don't want to take more of my panelists' time, but this has significant impact on financial inclusion, as you mentioned, especially on how do we term financial inclusion, because financial inclusion is not restricted to just access of accounts or using a payment service. Does it help people build resilience is the true test of financial inclusion's value to people. And what this entire pandemic did is, yes, we need digital financial infrastructure. Yes, they play a role, but it exposed the fragility of what we have today and the economic lives of people.
Thank you very much, Rashmi. Brian, are there any granular regional variations that you'd like to share with us?
Thank you very much, Prof, for inviting me to this panel and for giving me the opportunity to speak. I think what I'd agree largely with what Rashmi has said, but I think I'd like to add that what this pandemic has shown us is that it has shown the limelight on mobile money or digital financial services and how important those services are in dealing with a pandemic whose response by governments has been basically asking citizens to social distance and take enhanced sanitary and hygiene measures. So what we've seen is that countries which have greater incidence of digital financial services appear to have quickly been able to more or less embrace the situation and adapt to the new way of doing things, whereas countries where digital financial services were less pervasive, there seems to be perhaps more incidences of people struggling, perhaps just to get even their daily bread, struggling to move around when services and have been closed or locked up. So what we're seeing is greater incidence of DFS, digital financial services, allows people to adapt more quickly. We've also seen varying responses and varying impacts in countries. Remember, the pandemic is affecting countries in different ways. There are those countries which are harder hit than others. The response by governments to this pandemic has also been varying across the board. So what we're seeing is that those countries which took early measures, such as encouraging the waiver of transaction fees, expanding transaction limits, were able to migrate some transactions to the digital realm. For instance, transactions below certain thresholds, as well as transactions which might be, transactions which were facilitating e-commerce. We're seeing greater incidence of e-commerce transactions being paid through digital financial services. So I'd say that the response measures have also had a bearing on the ability of countries to adapt to the pandemic, and those response measures which were geared at supporting those at the bottom of the pyramid or SMEs, I think have been able to cope better than those countries where similar measures may not have been imposed.
Okay, thank you very much. So this is when we say that success is preparation meeting opportunity. The lesson, of course, is to strike while the iron is hot. Apparently, though, countries were as nimble as they could be, but as Rashmi says, we saw the fragility of the interventions or the programs we had in place. To what extent does the current suite of products and services offered meet the needs of the banked and unbanked consumers? I think we should now begin to look post COVID-19. At least we can. That's giving us some ability, so to draw some robust conclusions. Ashley, what do you think?
Hi, thanks again for having me. I think it's a very important question, and I think the bottom line is that we have a lot more work to do in terms of developing products and services that meet the needs of Nigerians, both during the crisis and post-crisis. And I like the framing of the question in terms of needs. So if we think about financial needs in 4 different categories, the first is making a payment or a transfer. And when EFinA did the most recent Access to Financial Services in Nigeria survey in 2018, we found that only 10% of Nigerians had made any sort of electronic payment. And that's payment specifically, but we see that there's sort of a big gap. We know that mobile money use is very low in Nigeria. Only about 3% of adults use mobile money, most of whom are banked. So we definitely have a challenge in terms of needing more widespread use of mobile money and digital financial services. Really need solutions that are widely accessible and that many people are using. So obviously it's easier to pay a merchant if the merchant is interested in receiving digital payments. It's easier to transfer money to a friend or family member if they also use mobile money or some kind of digital service or are familiar with how to do that. In terms of a second category of needs, just meeting expenses or liquidity. During the crisis, so we've been partnering with another sister organization. So FSD Uganda is a sister organization to EFinA as part of the FSD network. And there's another organization called Finmark Trust based in South Africa that has been conducting some rapid phone surveys across multiple African countries, including Nigeria. And we've partnered with them on the Nigeria survey. And what we found that even early in this sort of lockdown period, around the beginning of April, about half of Nigerians surveyed said at least one person in the household had consumed fewer meals in the past week because there wasn't enough money for food. So we saw already there's a challenge meeting expenses. Prior to this, we know that roughly a third of Nigerians were borrowing, and most people borrow from family or friends. Very few borrow from banks or other formal sources. And that's a pool that we expect to dry up when everybody, all of the family and friends are in the same crisis period. So we need to expand kind of the suite of services available to help people with that liquidity management. A third category is resilience, which was already mentioned, I think is, we already knew was important. And I think this has really just been emphasized by the crisis. In the same phone tracker survey, we found that only about 15% of Nigerian adults said that they could come up with an amount equivalent to 1/20th of gross national income, which is about 45,000 Naira within a week if they needed to do so. And a lot of those said that they would get the money from family or friends. So we see that we need more services to help people be resilient, to be able to kind of meet large expenses at short notice. We know the last A2F survey found only about 2% of Nigerian adults were insured. And a lot of that is auto insurance. So it's not really, helping mitigate the crises that people face day to day. And then in terms of the last need, in terms of meeting longer term goals, I think that we also need to be working to develop more relevant services for that as well. We know that not that many Nigerians have pensions. Most who do are formally employed by the government or large companies. So we need to kind of continue to work on expanding things like micro pensions, but also just have more products to help people save longer term. And I think that's going to be particularly important in Nigeria when we're coming out of the COVID crisis, and we'll likely be in recession, and I'm not sure what will happen with the Naira. I think we'll have to think about how do we develop solutions that help people with longer term savings that kind of protects them. Prof, I think you might be speaking, but you look like you're on mute.
Oh, thank you very much. Right. Okay. So thank you, Ashley. Maybe we should go over to the Francophones. Serge is there, and you're also an operator. So looking at needs and the suite of products, what would you say if you put that in a Francophone perspective? How, to what extent does the current suite of products and services offered in Francophone Francophonia, I think we shouldn't just limit it to West Africa. To what extent does it meet the needs of the bank and on the bank consumers? And what should FSPs be doing? Serge.
Okay. Yeah. Thank you, Professor. Thank you for the opportunity for this discussion. So on Francophone countries, first of all, just to give a high-level view on the COVID impact, there has been a different approach depending on the level each government assess the situation. So they essentially people, there was more partial confinement. When you take a country like Benin, we have only a cordon, sanitary cordon that has been implemented. And when you look at the product extent, I think what this helps us to realize is that, we are still at a very basic level from product perspective. Because when you look at the operators, the FSP in general in the West African region, Francophone countries, we are still very dependent on basic transaction. So almost when you look at the business, almost 90 to 95% of the revenue is coming from basic transaction, meaning, cash in transaction, cash out transaction, P2P transaction. So we are still in very early stage, and is for the moment, it's now that we start to pick up with more advanced solution like bank to wallet, where we do not have that significant penetration because all the banks are not yet integrated, which is a challenge because it's something we need to work on very quickly to ensure that bank to wallet is really integrated with all the banks so that money can come into the ecosystem. Companies can be paying directly through their bank account to the wallets, and this kind of integration, because without it, it's helping slowing down the way the money is flowing into the system. And when you look at the way the structure is across majority of countries, is the business is very dependent on super agents. On agent and super agent, which are the channels that are more cost-based. From cost perspective, there is a cost to that because as they are doing cash-in, we are paying commission to them on cash-in transaction. So things like bank integration must be quickly addressed regionally to ensure that people can just drop money from the bank wallet to the mobile wallet. I think this is one of the areas that we are covering, and it's a point that this current situation has revealed as weakness because people were not willing to go out from the house. But the point is that even if you own a bank account, you need to get out to cash out your money at the bank and then go and do cashing if your bank is not integrated. So this is something that needs to be addressed crosswise to ensure that we address this part. The second point I want to highlight is about remittance. So remittance in terms of product portfolio, it has a huge opportunity for this kind of situation because people in a more developed country has the ability to send money to people in homeland. So it is something that we have been seeing many operators now pushing up. So there are many operators now playing in this area. For example, we just used the COVID opportunity in our country to launch a world remit product, which allow people to receive money from more than 50 countries. And when we launched it, it was really welcome because at that moment where people cannot go necessarily to do basic cashing, money is flowing into the wallets for people abroad. So I think remittance is an area that overall in the industry we need to consider growing. The next point I will highlight is about retail payment. So in country like Benin, COVID was a good opportunity from merchant acquisition perspective, because I will say we have even increased the number of active merchants by more than 30% within 2 months, 30 to 40%, due to the fact that even the merchants that were reluctant to use digital money after the COVID situation were willing to receive money from the wallet. So they were just running to be on board on Momo. So it was an opportunity from merchant acquisition perspective. I think Rashmi has highlighted issue on agent side. I think we see the same thing, you know, in rural versus urban area where the perspective is a little bit different. And I will also highlight the corporate payment, where we still at early stage, and that needs to be really developed. It's something that has really picked up with COVID, with many companies trying to pay their workers remotely using mobile money. You know, so it has been a good opportunity for us. We have seen a lot of corporate customers coming to try to pay people through their wallet, even big institutions. And the last point I want to highlight from product perspective is about saving and lending. This kind of product is not yet in the portfolio of Francophone countries. I think some countries like Cote d'Ivoire have tried. They have an experience on that, but overall, it's an area where FSP are still lagging behind, and we need to push to come to this extent, allowing things like saving lending. So the opportunity is huge. There's a lot of opportunity, but the thing is that we need to move to the next level before another crisis comes, and we never know when. So we need really to accelerate on giving advanced service across the board. Thank you.
Oh, thank you very much. Well, let me go over to Brian. Kenya is seen as the what do you call it now, the exemplar in this regard. What would be your own perspective looking at Kenya, particularly with your intimate affiliation with all the good that have happened there? Because Serge says things at basic level in Francophonie. Ashley has also highlighted significant gaps in Nigeria. I'll eventually ask Rashmi to give us some sense of that Eastern Africa, Southern Africa news, or the goodies to Uganda and so on. But Brian, how would you chip in as if you look at Kenya? Is everything, how do you call it now, paradise there? Or?
Thank you, Professor. It's not paradise at all. I think the impacts of COVID are felt across the continent, but with basically perhaps at varying degrees. I think Serge has said a number of important things there, that it helps to migrate towards these kind of digital transactions and migrate away from just mere person-to-person transactions. As you will note, most governments are encouraging the use of digital financial services and encouraging the less cash handling. And if you're encouraging less cash handling, that means that you're not really providing any kind of incentives for the use of agents for cashing out. So I think maybe Kenya might have had the advantage of having moved towards what we call payments as a platform approach, where a number of players are plugged into the mobile financial systems, and customers are able to keep money in their wallets and use those monies for purposes of paying for goods and services. So it's not just using a mobile wallet for purposes of transferring money from one person to another, but actually using it for purposes of making payments. So I think that has maybe helped to some degree, in the sense that people are able to make purchases for goods and services without necessarily having to visit an agent. So even if some agents have been affected in terms of not being able to get the necessary footfall, or even perhaps maybe facing liquidity challenges, customers are still able to use money held in their wallet for purchases and purchases of goods and services. I think some of the impacts that have been mentioned by Serge are also felt on this end of the continent, in the sense that we've seen, of course, reduction in remittances. A lot of the remittances that were coming into Africa, not just East Africa, but Africa as a whole, are coming from migrant workers in the north, in Europe, in the US, many of whom have been adversely affected by the pandemic. So there has been, of course, a slump in remittance transactions, and that is felt across the board. In terms of agent liquidity issues, I think that's a valid concern. I think, just also looking at how the banking industry has reacted to the pandemic, banks have shortened their opening hours, basically just allowing people to, their workers to get home in time, and also as they take the necessary containment and social distancing measures. So this has obviously had an impact on the ability of agents to replenish their cash, or even to do their necessary banking activities. And to some extent, this has affected agent liquidity, especially in the more rural areas. But I think with every challenge, there are opportunities. I think we've seen, creative ways of ensuring agent liquidity. We've seen the mobile operators responding by coming up with measures to encourage financial institutions to avail liquidity to agents, and not just to agents, but also other customers who might require liquidity from banks. We've seen arrangements being made by financial institutions and the mobile money providers to avail credit, especially over this uncertain period or over long weekends. So I'd say during the initial mitigation phase, when the pandemic began to be felt in the continent, the impacts might have been greater than they currently are. But I think as we move towards our recovery phase, we'll be seeing the return to some kind of normalcy, liquidity improving. We'll be seeing a lot more digital financial transactions taking place outside of just cashing in and cashing out and transfers. And I think we'll also see a lot of innovation around the use of mobile money platforms by the developer community, by startups, people in the e-commerce space, picking up this as a viable payments option in the face of the new normal that will be there once this pandemic is done.
Okay, thank you very much. So essentially, it looks like the point panelists are making is that we should go beyond the basic services and look, the entire value chain is an opportunity for FSPs to explore. And there's going to probably be more demand for these services. Maybe then I should just direct this question to Rashmi. This is from Isa Omago. What has been the experience of the panelists with last mile cash disbursements over the last couple of weeks of global lockdown? I don't know. Rashmi, what's been happening in Uganda? Are things, did you have lockdown? Are things getting better? Have things improved in the last couple of weeks? Was there some bit of, agility displayed over time? Maybe you can just help us chip that in before we move ahead. Rashmi, did you get that? Well, it seems we probably lost her
Hello.
due to the rain clouds. Must be raining also in Uganda as it is in, yeah, okay, so Rashmi, yes. You're
I'm
back.
sorry, while I was rudely kicked off from
Did you
Zoom
get the
by
question?
yes, I did. I was kicked off from Zoom by my internet provider.
Okay, let's.
Hopefully MTN will give us all free bundles. Okay, coming to the question that you asked, Prof. So what we are seeing, as I mentioned, is that rural agents, when it comes to their livelihoods, were relatively less impacted than urban agents. Nonetheless, still impacted because a lockdown means that you need to go, the options to go put float or cash are limited. People are not able to come to the agent. So, you know, that transaction, most of the transaction profits are made from cash out services. That's where your biggest commissions are. That was not happening. The additional piece around last mile cash delivery became very critical across multiple countries when it came to government to person payments, which is, you know, your social welfare payments or social protection payments. That was significantly impacted. In the example of Uganda, because we do social protection payments for old age or the elderly who are vulnerable, and we wanted to do it, you know, at the end of the day, most of the elderly, the biometrics have degraded, you have cataract in your eyes, etc. So it would just end up being people gathered in a village, and you would have banks or mobile money agents giving cash out. But gathering was completely prevented because of a lockdown, and the elderly are more susceptible to COVID. It became a serious challenge, and unfortunately, we've not fixed all of it yet. For the past 3 months, we still have arrears and have not paid people because we were trying to fix the healthcare crisis first. And now we're trying to permanently figure out what is a digital solution and how do we have the relationship between the banks and mobile money agents so they can be the last mile delivery.
Okay, thank you very much. I think that was very much the situation in Nigeria as well. There was a piece I wrote in our policy tracker, sort of making jest of government to person payments being made by cash in Abuja, and you know that will never work. It will never be sustainable. And I also took part in a panel session looking at how agents have been impacted, and we found the same things, you know, balancing and so on, where there were issues. Of course, those who had groceries and so on, they did better. So the issues appear to be the same across Africa. Well, so let's move forward and look at how will the cost structure of the FSPs change post-COVID-19. That's very important, particularly for those of our participants, because this is looking at how we can help FSP serve the underserved and unserved, and we must think of the business dimension. So let me start with Brian, and then I will go over to Serge, who is an operator himself. So Brian, you want to take a bite at this cost structures?
Sure, I'll attempt. Well, so I talked about the mitigation phase and the recovery phase. I think it's common knowledge now that during the mitigation phase, a lot of countries responded by waiving transaction fees, whether these are person-to-person transaction fees, bank-to-wallet, wallet-to-bank, even merchant discount rates. But as we move towards this recovery phase, you know, there's serious questions about the sustainability of providing a free service, especially when the cash-in costs, especially for mobile money services, is pretty high. So I would think that we will see some rollback, and we have already seen some rollback. I'm sure Rashmi could speak to this. We've seen, for instance, in Uganda, MTN and Airtel kind of rolling back the fees to, I think, 50% of what they were before the lockdown. We also have examples from Ghana where the Ghana interbank and settlement system, the GIPS platform, which provides for interoperability between banks, mobile operators, and other payments players, had initially waived all merchant discount rates, but has decided to reverse that decision owing to the unsustainability of the business. So I think we will see costs to a large extent restored, but remember this, there are customers impacted by this, and it is likely that there may be some cost adjustments, lower cost adjustments imposed by mobile operators, because you already have a group of customers who are already very used to transacting without having to pay any fees. I think the more important question for us, or at least the thing that we would expect to see, is some mobile money providers or digital financial services providers, I think, should still have the latitude to set their pricing. At the end of the day, you want to have a viable digital financial services service, and that service is highly dependent on some of these transaction costs. So overall, I would say that there will be some, costs may remain the same in some certain segments or transaction types, but we should expect to see some cost adjustments in other segments, particularly in the lower transaction bands, which may be recouped perhaps from other transaction bands. Thank you.
Thank you, Brian. Serge, you must be itching to speak now, but so let's hear you. How are you guys seeing cost structures post COVID-19?
Okay, I think it's a very, very important question, because the cost structure, there's a lot of learning I believe we must take out from COVID situation. So overall, there has been some measures that has been taken. I will just give views of some measure that has been taken, and then go from there to talk about the impact on the cost to serve. So generally, what has been done across the board, there was a reaction around setting up P2P for free, bill payment for free, merchant payment for free. Let's say all of these things essentially has been action that have been taken, especially in Francophone countries with the regulator. So we have also increased the limits. But overall, the first lesson I would like to highlight from this is that, when we put free P2P up to a certain level, you face the risk to destroy the profitability of the FSP. That was one of the biggest learning we have from this, because when you take it, the point is that when the money is coming through the channel into the ecosystem, there's a cost for us. So there's a cost that we are paying to the channel for the caching. And when you are paying a cost, and at the other side, you take transaction like P2P and then you set them free, that means you are paying a cost, but you are not getting a revenue. So that's something that have hit significantly some of us, depending on the price structure of each country. So free P2P impact from our learnings is good when you stay at very minimal levels. Like, you can do it free to $4, $5. But when you start to go to $10, more than $10, knowing that most of our transactions are low value transactions, then you start to see a big hit on your profitability. And that's one of the challenges that we have been facing with COVID, with significant impact on our profitability. So one of the learning, knowing that we do not get, a massive increase of transaction after setting free P2P free, we had less than double-digit growth on the transaction. So at the end, I think it will be wiser to go for models like a discount, because discount allow you to benefit from elasticity. But when you set everything at zero, then the impact on the business from cost and margin perspective is very high. That's the first key point I want to touch on. The second one is that the way the model has been done in the beginning in many countries attract very high cost of serving, except some countries where you have already a good financial inclusion with bank spread all across the country and leveraging more on banks than on the super agent. When you take a country like Ghana, for example, almost all the banks are integrated with the operators, and banks have very large coverage, which then help most of the business happening at the bank's level and not necessarily at the super agent and agent level, knowing that in other countries, super agent and agents hold almost 95% of the business. So what happened is that the cost structure is very massive for us. So you spend almost 70% on your revenue on channel cost, which is very, very important. And it's something that now that we have invested on the platform, we have invested on the channel, we need to bring in advanced service to try to mitigate the impact from margin perspective. So currently COVID has, I will say honestly from my view, some measures that we have taken has a very negative impact from profitability perspective, but from inclusion perspective, let's say we have seen a 5 to 6% increase of our active subscriber base. So not very massive growth at that end. So the next point I want to highlight about the cost of serving is that we need to learn more from each others to try to see more advanced model to optimize our costs, because the way it's structured currently is that when you're already paying almost 70% of your revenue as channel cost, and knowing that you have done investment on platform, have license, you have OPEX, you have this kind of thing. So it is very challenging. So we continue to think about how to make money more from things like float, etc., to try to compensate a little bit the structure that we have currently. And as I was saying, more we have more banks integrated, and this will help us to also mitigate a little bit the dependency on the channels that are more costly. So it's something that we need overall to continue to look at to try to survive through this kind of crisis. But again, it's a good learning for us, and it helps us to continue to think about how we can explore other services to reduce the cost of serve and increase the profitability of the FSP. Thank you.
Thank you. Those were insightful comments from Brian and Serge. And if I may just quickly mention, I hope we have the regulators listening, because some of these can help in terms of tweaking the templates. But I do remember that in Nigeria, one of the consensus items that regulators, FSPs, and other stakeholders agreed in 2017, which many of which have been implemented, is that cross-subsidization could probably be a way to go. In other words, those who can pay, may probably subsidize those who are further down in the channel. You've talked about discounts. That's something else that you can look at. But it also looks like this, all I've been hearing seems to suggest the need for greater measure of collaboration and leveraging between systems. You talked about the inherent costs of the agency model. And of course, banks really would, if they like, if they had their way, keep the telcos out of the field. But it does suggest that we must find a way to have effective collaboration between banks, telcos, and everyone. so that we bring it more like co-location, co-location templates may really serve win-win outcomes for everyone. It's also important that we must move very rapidly from basic services in order to and have more, capture more of the value chain. So probably there's an incentive there for FSPs to push out, but there probably needs to be quite some bit of leverage, and maybe regulators need to help in that regard. I'd like to move on, and there's a question here which I would like to pick on as I go to Rashmi. It's saying, okay, so far for all the challenges, what innovations, as Obed Serge, what innovations have we seen, or will we see? I mean, challenges are also opportunities for innovations. Did you see any innovations there? What innovations do you think will happen? And how do we help, struggling agents, particularly those in rural locations where, telecom service is not there or is not strong, and you probably still have to depend on agents. So all those innovation things, I've piled them on you, Rashmi, and I'd also like to come to Ashley to give us a sense, because you guys work a lot with the agents and you also work a lot with consumers. So let's start with Rashmi.
Thank you very much, Prof, and thank you for the question. Before I go into the innovation angle, Prof, if Serge will allow me, I slightly disagree with what he said. So, a lot of, I think we can't look at it as black and white. If you look at most of Africa, there are very few payment providers that don't have another business, like MTN, Airtel, Safaricom. They have the GSM business. That is where a lot of the money is made. GSM has seen a massive rise in call data, and the consumption of data. In fact, MTN's network could not handle the level of GSM related activity that was happening. So while we must have seen, definitely, I agree with his comments that there have been cash-in challenges, the cost of that channel has not been fit in, but it was not, we need to look at the picture holistically. So Serge, I apologize for actively disagreeing, but hopefully we can still be friends after this. Now coming to the question from
Oh, sure, it's fine. It's fine. It's perfect. It's a nice comment. I was talking about the mobile financial side only, not about the whole GSM industry.
Don't forget, Serge has to talk to his superiors on that side. They don't give him any leave on the general business. Yes. Okay, Rashmi.
Coming to the innovations piece. So here are a couple of things that we have seen, right? Is the rise of e-commerce. E-commerce, unlike Kenya, South Africa, and Nigeria, is still nascent in Uganda. And what we suddenly saw is several, as you mentioned, Prof, several companies were like, we need another revenue channel. We have to figure a way to get onto Jumia, a couple of other e-commerce, local indigenous e-commerce that we have in the country. And what these e-commerce sites did is partnered. They already had payments built into the site. What they needed was a logistics delivery service. So they started partnering with transportation companies that had that logistics network. They very quickly started onboarding all types of non-essential businesses like restaurants, etc. People wanted, groceries. Alcohol, for some reason, was the most highest rated good that was purchased on e-commerce. Please don't ask me why that is the case, but that is what the statistics show. And market vendors, ladies who used to sell like not more than $20, $30 of fresh produce per day, started using e-commerce because there was just no other way for them to earn revenue, because there's nobody going to the market. They would actually end up sleeping in the markets. So we've seen some of this new innovation of people who otherwise would never consider digital coming on board. When it came to, you asked the question around how do we help some of the agents in the rural areas? Again, that's a question that I would request that we need to take holistically. what do people still in Africa use mobile money for, or mobile payments for? As Ashley mentioned, a lot of that is for payments. People save and borrow from local SACCOs, from village savings groups, etc. So we saw a lot of drawdown on that liquidity, but strangely enough, we expected that after 60 days of lockdown, it would have gone to zero, but people left balances. And we have two hypotheses. A, it's very difficult to get there, or B, that people are afraid that there will be challenges and it's not going to get better anytime soon. So whatever little liquidity they have, they're leaving. And we're seeing that from the statistics that are coming out of these organizations that serve people in the last mile.
Thank you very much, Rashmi. So you've covered both ends and disagreed with Serge. Oh, well, you've delivered some reality check to Serge. I don't know if Ashley also has, that was a left hand or was that a right hand? Maybe Ashley has a right hand or left hand to give also to Serge. But also the issues around what innovations have we seen or do we expect to see? And how do we help struggling agents, particularly in rural locations?
Yeah, I think in terms of innovation, we've seen some, and I think like Rashmi mentioned, I think e-commerce has sort of gotten an initial push, and we did have sort of the start of an e-commerce and digital platforms, not just commerce, but just kind of platforms for gig economy and et cetera. A digital platform kind of emerging environment in Nigeria, and I think that's gotten a boost. I'm actually hoping that we're going to see a lot more innovation, and that's something that we are kind of trying to also work with the industry to drive. We'll have some upcoming kind of ideathons and hackathons. So I'm sort of hoping that the best, you know, there's a lot in the works that we'll start to see being deployed in the market in the coming months. But coming to the question about agents, it's sort of interesting because although lockdowns were more impactful in urban areas, we know kind of historically prior to COVID, urban agents tended to just struggle more in Nigeria, at least generally. And I know that Lagos Business School had done research a year or two ago, agent economics, that, you know, highlighted the fact that for many rural agents, it was sort of a tough business case, with the exception maybe of some more urban oases. So, and we've also conducted some recent research with agents, including a survey on agent churn. And really agents we see in Nigeria, a lot of agents have been dropping out, especially, and the primary reason is just low commission. Although liquidity management and some other challenges are also cited. And we've actually, EFinA has been conducting a phone survey of agents over the past few weeks since the pandemic started. Unfortunately, we don't have the results yet, so I'll be able to kind of share a more comprehensive answer in a week or two. But early results indicate that a lot of agents have seen reduced commission during this period, you know, because of lockdown, but other, you know, just general economic impact. So I do expect I expect to see, you know, many agents were already sort of struggling to find a viable business case. And I think the pandemic is going to put many of the vulnerable agents in a more vulnerable position. So I think that one thing we'll need to think about as an industry is kind of in recovery, how do we then help create a better business case for agents? Brian made reference to kind of importance of market-based, you know, allowing the market to price services, if I heard correctly. And I think that's important in agent networks in Nigeria, for example, to encourage providers to invest in deploying agents instead of capping the fees that could be charged for transactions. I think we'll have to think about, you know, how do we kind of create more models, invest in agents strategically, including, you know, building off of some of the data that LBS and has provided in terms of the geospatial mapping and things like that.
Right, okay. I think the banks certainly must move to agent banking, you know, so that they certainly must if they want to be more effective, lower their cost to serve. Of course, as you do mention, there are areas that will be a struggle, but the study we did at LBS shows that there are at least 10,000 locations that would be immediately viable if agents were placed there. So the learning also is that we must be somewhat strategic and scientific in placing agents, and we also need to ensure that it's better to have to allow it. Well, this issue of exclusivity probably will not work. So this collaboration, interoperability, I think those are really very important. Let's move on a bit now. And what should FSPs be doing to build resilience that will help them survive the impacts of COVID-19? And let's be frank, these challenges are also helpful because it stretches us, it causes us to innovate, it cuts out all the chaff and the waste. So in a way, we should be happy that this delivered some bit of stress to the system. So let's start with Serge. You're right there in the thick of things. What are the things that occupy your mind? What keeps you awake in terms of resilience? And don't just speak from the point of view now of telco. Can you get into the mind of maybe the banks as well? Yeah, Serge.
Yeah, I think just want to clarify something because in West Africa, let's say with the central bank, you know, we are two different entities. So here there is the MFS company that is completely different from the GSM company. So we are really two separate companies operating, you know, so my comment was about the MFS company that I'm running. So on the GSM side, I understand the comment of Rashmi, but overall there's a significant drop of revenue in voice. For sure, there's a growth in data, but knowing that voice contribution to revenue is the most important, so it's still challenging from telco side. So my point was essentially on the financial service business. That is a different business. That is the FSP business. Like in Côte d'Ivoire also, that they have two different companies operating in that area. There is the MFS and the GSM. So from resilience perspective, I think that was the point that you were highlighting.
Yes, please.
I think from the resilient perspective, first of all, I believe that we need to review the way our channel is operating. I think we need to review it because currently we are still very dependent on cash. And what is happening is that there's still cash that needs to come into the ecosystem. I remember when the COVID crisis started earlier, people start throwing the rumors that, you know, it may be possible that the virus spread through the cash. You know, there have been two different schools about that. Some saying that it's coming through cash, some saying it's not coming through cash. But the point is that on the early days, we have seen an impact from the people's behavior because they need to put their cash in the wallet. And this is a cash transaction at the end. So at the entry of the model, there's still the cash constraint that is there. And when you see the dependency on cash out, so there's still a correlation with cash. So I believe where we need to work as an industry is how to reduce the level of dependency to cash. Because at the end where we're running still now, there's still very high dependency on the cash from the ecosystem perspective. So for this, I think it will need a common effort with government, with regulations to set up measures like, not allowing payment, putting some limits for cash payments, you know. So because today in some countries they have put this kind of limits, but in reality it's not really operating because people are still throwing a lot of money using cash. So I think this will be a good rules to help us to reduce our dependency on cash on the ecosystem side. That's my first point. The second point, I will talk about the way mobile financial services is growing. We need also to look at how do we, you know, reinforce our system capabilities to prevent things like, you know, digital fraud and all of that. Because there have been many industries where this kind of issue, where they come in a level of crisis like that, is very destructive for the business. So it's something that we need to be very careful about, like cyber attack, like different frauds and this kind of thing. It's an area that we need to be very careful about to ensure sustainability and continuity of the business. So I think that's some of the points that I would like to highlight from resilience perspective. Thank you.
Okay, thank you very much. Perhaps I should just quickly ask Rashmi, is there anything you'd like to add to what Serge has said, or rather any advice or insights you'd like to give FSPs?
So I can speak from what we are seeing in multiple countries, Prof, and Serge has touched upon a lot of them, so I won't repeat them. A couple of things. Banks are seeing a positive trend in some ways, which is that people are moving away from being in banking halls. Some of the largest banks have seen that 30% of their clients, now that we've gradually started opening, are, you know, it has reduced that activity. People were forced to learn how to use mobile banking, are comfortable with it. So there's a change in consumer behavior for the good. Which is great. What other banks, so there are categories of financial service providers. So you have your commercial banks, VSLAs, SACCOs, non-bank financial companies, and non-deposit taking MFIs. All of these tiers of institutions have realized that digitization is extremely key to resilience. Most of them could not serve their customers during a lockdown for varied reasons. They need to integrate that entire value chain, right from agents to even knowing how much, estimating, especially for non-deposit taking MFIs, stress testing, knowing how much of their assets are going to be at risk. We are going to see an existential threat to the MFI sector. And most of them, in the case of Uganda, some very good MFIs have seen repayment rates go down from 80 to 90% on aggregate to 30%. So that is a massive shock to their system. They don't take deposits, they don't have operational cash flows, have laid off staff. So that part of that financial sector that was serving the informal, economically, your casual laborer, your trader, that is significantly challenged, and that's a concern for a lot of regulators worldwide. So if we were more digitized, regulators would even know how much liquidity to inject. And are you even putting money in a sinking ship, or can this ship be saved? So that's a question. I also would like to re-emphasize what Serge said, that regulators need to consider in these times fraud and cybersecurity as a utility, the way you consider national water or electricity, because that is a market infrastructure cost that needs to be shared and not passed on to the consumer. So,
thank you very much. Brian, what specific changes or incentives and regulation would be required at this time to ease the burden on FSPs, particularly to ensure that the priority segments, the unserved, are not disrupted?
Thank you, Prof. I think if we look at the if we look at this in through two lenses, one, looking at the measures that regulators have imposed, whose impact is likely to affect service viability. So measures such as fee waivers, and the like. I think one thing we would recommend to regulators is to consider short-term application of those fee waivers. So rather than make this a blanket requirement, I think this needs to be done on perhaps on a month-on-month basis and in full consultation with the service providers. In terms of measures whose impact encourages adoption and use of digital financial services, such as transaction and wallet balance limits enhancements, or KYC interventions such as eKYC or relaxation of KYC measures. I think what we would like to see is regulators making those measures more permanent, because they, one, build the resilience of mobile financial services, or indeed digital financial services as a whole. They also encourage the SME sector. I mean, the SME sector is the backbone of a lot of our African economies, and if they are able to use these digital financial services because they have, greater wallet balances or have easier onboarding requirements for customers, then that would be a measure I think that would help build the resilience of these mobile financial services. But in addition to that, I'd also like to say that it's important for governments, despite the difficulties that various governments are facing, brought on by this COVID pandemic and other factors. I think it would be important to see some kind of perhaps tax waivers during this period for financial services providers. Tax accounts for a fairly significant portion of the transaction charges in some countries. And therefore any kind of waivers, I think, should be encouraged. It doesn't matter that the tax is applied on the consumer fees. A lot of the time, these fees will always be borne by the consumer, and therefore it's important to consider this in consultation with the industry. I think it's also very important for dialogue to continue between the regulators and the industry as a whole. In some countries, we saw measures being imposed without proper consultation of the industry, and the impact of that has been some reluctance to apply those measures by the industry. Yet in other countries, and many other countries for that, there was I would say optimum dialogue that took place leading up to the measures that were taken. And lastly, I would say that I think the mobile industry has demonstrated that it's very well positioned to build scalable digital financial services better than the incumbents, or even some of the newer players, the fintechs and the like. And it's therefore important for regulators to perhaps lower the entry barriers or other non-regulatory barriers that may be imposed, whether political or whatever, just to allow as many mobile operators as possible to offer these services. The more suppliers of digital financial services there are, I think the better outcomes there would be for consumers, in the sense that competition would help lower transaction fees. So I think these are the few measures that I'd like to talk about. Thanks.
Well, actually, would you like to speak a little bit to that question? That's what should regulators do to ease the burden on FSPs, along with the question, in what ways should regulators be a bit more alert in terms of supervisory and oversight functions to nudge or not nudge? We really need growth. We need significant growth, also stability in the financial services ecosystem. Now, in terms of what regulators should do, I wanted to look at it from the DMO, MFI, more from the banking perspective. And then what should regulators be doing to enhance their supervisory and oversight functions?
Yeah, I think, and I really agree with what Brian had said on the regulatory side. So I won't reiterate everything for the sake of time, but I think, you know, the KYC requirements, streamlining a bit, I think can help sort of across the industry. And I agree with the point that it would probably be useful to look at what sort of permanent improvements can be made, because for providers, you know, if a temporary change is made in terms of kind of KYC and customer due diligence requirements, then there's some uncertainty among providers about, well, what would they do in, you know, 6 months' time if that's rolled back. So I think that there's some opportunity to just make some of the changes that we maybe thought could have happened anyway. And I agree with the idea of exploring maybe tax holidays, or at a minimum, not adding more fees into the mix, which we saw in Nigeria, you know, when the stamp duty was applied to digital, you know, some of the digital transactions. It was that was initially kind of passed along to customers right away and was a strong disincentive to use digital payments. And I also agree with the idea of, I think for right now, one of the things, so I guess maybe there are 2 points I would underscore in terms of what regulators can do. I think that we're going to really, kind of coming back to the concept of innovation and the need for innovative digital financial services. I think we need to continue to really work to have a strong regulatory enabling environment for digital financial services. And I know the central bank and others were starting to work on that. So continuing to put in place, you know, kind of more streamlined regulations for e-payments, clearer options for fintechs to sort of enter the space through clear regulations and potentially regulatory sandbox, et cetera. And also, you know, making the space as open as possible for players, you know, more players to participate while still mitigating risk, particularly at this time, you know, as Rashmi mentioned, I think there's, you know, some serious risk to some providers, right? And so I think we sort of need all hands on deck right now in terms of providing financial services and, you know, hopefully opening up opportunities kind of across the board if more customers can be brought into the formal system. So I think one way, for example, that the central bank could help accelerate recovery is kind of moving forward with licensing of payment service banks. So issuing, you know, full licenses to the AIP holders, reviewing, kind of issuing more approvals in principle for additional providers, et cetera. So did I cover everything?
Yes,
you wanted me to cover? Okay,
you
thanks.
did help. And I'd like to begin to wind us down by going to some of the questions. We do have, we actually have 19 questions. I think some of them have been attended to in the discussion, but and I see there's a raised hand. Chisom, will you kindly put your question on in the Q&A portal? Let me just take a few. Rashmi, Chijioke would like to know about the gender gap in digital finance. Can you provide some context on the current gender equity trend in digital finance and if there will be an improvement in the African continent? If you very quickly, that's a very important area, the gender gap.
All right. That's a significantly important question. What the pandemic revealed is that it is not gender agnostic. Women are left worse off than men because for a couple of reasons. They had, even before the pandemic started, the data showed that women had less liquid cash available. Most women, you know, especially rural women, have semi-liquid like goats and chicken and poultry, etc., in multiple countries. And you cannot sell that asset when the whole country is in lockdown or you're doing a distress sale. So you are getting less value than what you were getting. It left, so that's one thing. Second, women's phone ownership in multiple countries is significantly less by several percentage percentage points than men. The same goes for data, and the same goes for smartphone. So when it came to all of this innovation that was happening, women could not take advantage of it as much as men. There could be potential solutions, including unsexy ideas like actually buying phones and giving women phone. But of course, there's then the challenge of, can you charge the phone? But sure. There also needs to be we need to figure out ways of increasing literacy for women, and more importantly, what products and services and where they actually borrow and save, are those institutions and services responding to their needs? So you asked me to be concise. This is me attempting.
Thank you very much. In the early days in the UK and so on, I think the phones were being given out to customers. So maybe it's not so far-fetched. Let me go on to another question, and maybe I'll direct this to Brian. This is from Sheya Wushika. What customer data or transaction insights from this pandemic period can be used to design post-COVID products and services? Brian, did you get that? Do you feel comfortable with that? If not, I think Ashley would be able to help. Yeah.
I'll give it a stab. I'm not very good at, I'm not the expert on industry data, but I think what we've seen is that there's, the impact of this COVID has it varies from, I guess, country to country and also region to region. We recently had a webinar which drew in participants from Africa and from Asia, and we saw that the Asian subcontinent, there was, I guess, a lot more positive impact coming out of the pandemic, a lot of rise in transactions, etc. Whereas in Africa, we saw varied impacts. Some operators say that they had greater transactions in the lower bands, perhaps because those had been zero rated, fewer merchant transactions, and the like. So as to how those would help guide design of products and services, I think this will really be dependent on each country, each operator's own unique circumstances brought on by the pandemic. But I'll leave it to any other panelist who perhaps like to chime in.
Ashley, can you quickly make a stab at that?
Sorry, Prof. I was trying to type a response to a question when you asked that. Can you repeat your question?
Okay, somebody wants to know what the data and transaction dynamics can do in terms of products.
Okay, so let me...
Creating products.
Maybe I'll answer what I think that question is asking. I think that, I guess at the end of the day, there, as we talked about before, I think there's a lot of sort of opportunity for innovation in the context of a push to digital. So I think that I think that we can, and as we discussed before, I think that we do need to create more. We have a lot of gaps, I suppose, in terms of not really having products and services that are meeting the needs, especially of excluded groups. So I think that we sort of need to tackle it from a few angles, including, looking at new kind of partnership approaches, looking at sort of new digital models, but also continuing to take a very human-centric approach to developing products, including for excluded groups like women that Rashmi was just touching on, or, even simple things. If we're creating digital interfaces, we know that if it's in English, it's not going to reach a lot of Nigerians effectively, or the interface might be confusing, et cetera.
Okay, thank you very much. Products, probably a lot more thinking has to be done around the agent side of things, because that's an area where there's a problem. Serge, what strategies are you adopting or could be adopted to promote acceptance of digital payments at merchants, and therefore promote consumers to keep the value in their wallet for longer? This is a question. Oh, this is anonymous attendee, but it's specifically for you, Serge. What strategies are you adopting to promote acceptance of digital payments at merchants and therefore promote consumers, or is that encourage consumers to keep the value in their wallet for longer? Yes.
Thank you for the question. I think from a merchant acquisition perspective, I think there are many things that are happening in that area. I think the first one is to have a different focus from recruitment perspective on the merchants. So we have teams on the ground. We have specific teams on the ground recruiting the merchants. So all across the country with a segmentation of merchants in place. So it's always important to segment merchants to see exactly what are the different category of merchants and focus, have a different strategy for each category of merchant. That's a key thing that is helping us because needs from merchant are very different depending on the type of merchant that you are looking for, because you have big retailers, you have small retailer in market. So it is essentially that. So we have different segments, different teams focusing on each segment, trying to get the merchants on board. One of the key factor that we have seen on the merchant side is, the pricing model, because the initial pricing model was that, you need to take a fees from the merchant like other players do generally, because when you pay, you need to get some money from it. So it is something that has really slowed down the growth in that area, because merchants are very reluctant to pay a percentage of fees on the transaction that they are doing to the FSP. So this was a very big challenge for us. And when you look at some merchants, their business model is structured, even when you take things like, how will I call them? People who are sending goods in markets, they have very low margins. So when you as FSP, you are coming to them to say, okay, if I collect money for you, I will take 1% or something. Sometimes the margin is even less than 1%. So it was a key barrier for us. So one of the things we do during the COVID situation is that we leverage on the situation to try to put a trial, to set it free, to give chance for merchants to get in. So we are running a promo in that regard for 3 months to where there's no fees for merchants. For sure, we lose revenue, but it's an experience for us to push the adoption at merchant side, because with low income people, when you start to ask them that you need to collect something on their money, they are very reluctant on that. So that's a key thing. The last one I will highlight is about the deployment of the merchant. We are looking for solution because, they have been different SIMs for merchant and different SIM for subscriber. So this is an area that we are launching solution. I know some markets has done solution where this is integrated so that the guy doesn't need to have another phone where he puts his merchant SIM to transact differently as merchant, but he can do both transactions on the same SIM. So it's something that we are also exploring because it's happening in other countries. So overall, I think if these factors are really addressed, we should have a lot of merchants now coming on board. And that's what we have already started to see during this promo period where there was no fee for them to pay. So just to summarize, that's the key issues or the key initiative that I have put in place to drive merchant adoption. And it is doing quite well, especially in the COVID period. We have seen a very good growth in that area.
Okay, well, we're all too soon really at the end We've gone a little bit past the 12:30 beat. I would just like Rashmi to take this question. What specific incentives can be put in place, especially for the informal sector? When she does that, we'll begin to bring this to an end.
This is actually, so is this question directly towards merchant payments, Prof? Sorry.
No,
or is it
for informal sector, how do you incentivize them to bring them into the ecosystem?
So I will speak to it from two areas.
Looking at startups and so on, yeah. Please go on.
Sorry, so as you know, Brian, multiple panelists have already mentioned, so the way most financial services have approached the informal sector is person-to-business payments, which is merchant payments, and saying that can we create, because merchant payments are a two-sided market, you need to create value for the merchant, and incentives, you need to create value and incentives for the customer, both of whom, merchants and customers, are perfectly fine using cash. There is nothing wrong with cash, and people prefer cash, also because it also helps you to underreport how many transactions and revenue you have in a month, and therefore the taxman doesn't have complete visibility. So everybody benefits from a cash economy. Therefore, if you want to look at informal sector, a couple of things in making them formalized and increasing the tax basis of African economies. One is there an incentive for the informal sector to formalize? What is in it for them? Second, are there very high barriers for them to formalize? For example, KYC requirements. In a lot of African countries, extremely painful to get all of the, you get a basic wallet approved, say for MTN, Momo Pay, and you become a merchant. But once you start doing, you start doing well and you want more transactions, and to accept more transactions, the number of documents that you need to mail MTN is just really high because it's a regulatory requirement. So if there are ways of cutting those barriers and making it easier for people to become formal, that's step one. Second, what is the incentive for them? An example from Kenya that Brian can speak to very well is that you have companies that say, hey, if you are Ajay Enterprises Limited, we will give you 30% of your cash flow that we have observed over the past 3 months as credit to increase your inventory. Then you as a informal merchant is like, oh, no bank will give me credit, but you would give me credit based on my digital cash flows. That's interesting. I might do that. That gives me a reason to become digital. So it's all a question of incentives and making sure, are you solving a pain point? Saying that digital is convenient, nobody has especially people at the bottom of the pyramid don't have a convenience problem. They have a money issue. They have other types of pain points. If you're not solving that, you're not solving the problem.
Thank you very much. Well, I think if some of the other questions we can direct to our panelists, I think they will be willing to do service for Africa beyond this point. And even if Nkem doesn't give free bundles and Serge cannot get us onto MTN Benin Republic, they'll be very willing to do some free service and answer some of your questions that have not been attended to. One of them that I see is, how can the banks deal with NPLs? I'm sorry, we can't get to that. But the discussion on on resilience probably gives some insight as to what banks can do. One of the easy things, of course, is that we have to look at the opportunity side and go up the value chain. We need to leverage a lot more in the ecosystem, and I think that would help us all. I think Timothy would like to make some comments before we all round up, but on my own part, I'd like to say thank you for your engagement, panelists. Thank you for the candor. Thank you for giving us time today. And thank you for the service to Africa. One of the questions is, how can we encourage intra-African payments? Unfortunately, we don't have time to take that, even though someone would say, well, why don't you deal with payments in your own country first? But I think we can do these things simultaneously. We don't have to do things in silos. I would have loved Brian to answer that, but perhaps we can direct that offline and we can get the answers to you. So it may be a pandemic today, but another type of shock next time. Change is what will always remain permanent. And Africa would have done so much better had the financial inclusion landscape been more developed. So financial inclusion is imperative for sustainable development and for quicker recovery from COVID-19 induced recessionary impacts. And I think FSPs will have to just dig in and go down that route. And I think countries also have to do that, because the more we can bring the idle capacity that is latent in the underserved and unserved, the quicker we can increase the volume of economic activity and probably also beneficiate the quality of that economic activity. Regulators and stakeholders, FSPs, have to sit together, as our panelists have mentioned, and there needs to be that help to ensure that we look at the business side of things, we look at the socioeconomic influence of things, and we look at the development impacts as well. So this should become the core business of discerning FSPs. In other words, financial inclusion should not be seen as an adjunct complement. It probably should be seen as a discerning, as a core business, particularly those who want to be first movers or who want to create, what do you call it now, who want to bring non-consumption into their profitability. And governments should institute the right measures and enabling environment to leverage stakeholder collaboration. Lagos Business School is available to help you and support your organizations with training, with research, and convening platforms to meet across industry with regulators and stakeholders. And we'll be very glad to help you in this. This is just the start of the conversation. I want to say thank you again to our panelists and to all of you who have been with us. A great thank you. I hope the conversation will continue. On my side, it's goodbye as I hand over to Nkem and Timothy. Thank you very much.
Okay, thank you very much, Prof.
Thank you very much, Prof. Thank you.
Thank you very much.
That was really, really super fantastic. So at this point, I'll call on Timothy. Also, thank you, our very distinguished panelists. Your contributions were quite phenomenal in helping us improve our overall understanding of how FSPs are reacting and responding to these times. Thank you so much. We hope you would answer us when next we call on you. Thank you. Thank you. So I think
on my side is just to say thank you to all the panelists as well and to all our very engaging conversation.
Yeah. So Timothy, over to you, sir.
Well, Timothy, you are muted. I hope it's not
Timothy, are you there?
And I think you're muted. I hope he's not speaking, and then, yeah, you have to repeat what you said, yes.
Okay, so I said it's just to say thank you to all our panelists and all our attendees. I think we had a very engaging conversation. Like Prof has mentioned, we'll definitely come back to ask for more, so thank you very much. We look forward to engaging with you further. And thanks to all attendees as well.
Okay, thank you.
So I think
Thanks very much.
That's it from my side.
Thank you very much for the opportunity. Thank you, Prof.
Thank you, Prof, and thank you to the
Bye-bye.